Innovative Industrial Properties reported earnings about a week ago, and the stock went down almost 20%. And taking a quick peek at the earnings, we see that they've missed on both the FFO and revenue, but more on that in a second. One of the reasons people really love IIPR stock is because of that juicy 7.14% dividend yield. And to be honest, some pretty impressive growth stats for a REIT as well. Looking at the total returns, we see that in the past 5 years, IIPR did a pretty decent job, with pretty high returns back in the days. As of lately, they are struggling. So this begs the question, what happened at the recent earnings and is IIPR stock in the buying range? As mentioned a second ago, IIPR stock missed on the EPS and revenue estimates. Looking at the actual revenue numbers, we see that revenue was reported at 76.5 million, down from last year's 77.8 million in revenue. So we're off to a bad start here. Meanwhile, expenses are increasing and thus the margins go down. This results in a $1.37 net income per share, down 6% year over year. And looking at the most important numbers, the FFO and AFFO, we see that these are going down as well, year over year, with -2 and -3%. This also worries me a little bit. Growth is slowing down drastically, and they aren't able to increase their margins. And the thing is, most other parts of the business are actually looking really interesting. In total, IIPR has 108 properties in their portfolio, across 19 states, with a weighted average lease term of 14 years, which is actually pretty good, especially in this type of business. Illinois is the biggest state with 14.6% ABR, and 7 properties in total. Pennsylvania is second biggest together with Massachusetts. Personally, I prefer a maximum of 10% per state, but for this type of company it is of course a little different. So this looks pretty good to me. Looking at the property type, we see that 92% is industrial and only 2% is retail. Looking at the tenant diversification, we see that pharmacy is the biggest with 16.5% of the total ABR. And again, I prefer a maximum of 10% here. Another thing to keep your eye on is the tenant growth. Ever since 2022, this is hardly growing. Hence why the revenue is also slowing down a lot lately. IIPR is one of the lowest leveraged public REITs, with 11% debt to total gross assets and a 70 times debt coverage ratio. This comforts me a lot, but more on that later in the video. A thing to keep your eye on is the B credit rating. I prefer A credit ratings here, but since this company is relatively young, we give them the benefit of the doubt. Looking at the dividends and AFFO payout ratio, we see that this is looking really good. The payout ratio is sitting at a healthy 80% as of right now, which is a little bit above the 75% average for REITs. And the growth in dividends is really phenomenal. IIPR and basically the whole industry is very excited about the future, with high expectations in terms of market growth and legalization. This is something to keep your eye on. Their whole business model is based on this specific industry. And now that we know more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. IIPR is a 3.11 billion market cap company. PE ratio is not a fair metric to use with REITs, so I'll be using the price to FFO instead. And right now it is sitting at 13.3, indicating they might be undervalued. Later in this video, I will show you my 3 price targets for IIPR stock, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 312 million, and in this graph we see that revenue went up in the long run. And ever since the moment they weren't able to get new tenants, the revenue growth slowed down a lot. This is something that worries me a lot. We see that margins are kinda following the same pattern here. And even worse, they are going down. Especially the gross margin is not looking any good. EPS is following the same pattern. Nothing really special to add here. Analysis expect really low EPS growth in the rest of 2024. And in 2025, it is expected to see a 10% increase again. For the revenue, it is a pretty similar story. 2024 is going to be a tough year. After that, things are expected to slowly increase again. Return on assets is sitting at 7%, which is a decent number. Return on equity looks also a bit low. And the most important number, return on invested capital, is sitting at 4.3%, which is again a low number. But it is slightly higher than the 5-year average, so that's nice. Current ratio is at 2.66, which is a bit on the higher side to be honest, so keep your eye on this number. And right now, IIPR has 300 million in debt. And I prefer companies that can pay down at least a big chunk of their total debt with the total cash. IIPR has 147 million in total cash, so they can pay down almost a big chunk of their debt. This is something that I really like, especially with a REIT. But it is still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is a great thing. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. But in the recent years, shares outstanding were kinda flat. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is still sitting at 7.14%, which is a great number. Annual payout is at $7.6, and payout ratio is at 80% and not the 93% displayed here, which is slightly above the 75% average for REITs. The 5-year growth rate is at 28%, which is an insane number for a REIT. And they grew the dividends for 6 years in a row, which is also very nice. In here we see the dividends paid since 2014. It is increasing at a high amount every year, so this looks really good to me. We also see that growth is slowing down a bit, which is not a bad thing per se in my opinion, but more something to keep your eye on. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It is expected to increase at lower levels, which is still very nice. And overall these dividends look really good to me, but how about the historical returns? I decided to compare IIPR stock with the overall market, in this case the S&P 500. Next to that I added LXP and PLYM. On the 5-year chart we see that IIPR had a total return of 72%, and this is including dividends. The S&P 500 is sitting at nearly 110%, massively outperforming the other stocks in this list. On the 1-year chart it looks pretty different, with IIPR sitting at a 53% return. This time they are massively beating the others in this list. On the 6-month chart it is again looking completely different, and the S&P 500 is back at the top in the list with 16% return. On the 1-month chart it is IIPR that has a massive minus 17% return, also due to the recent earnings. The S&P 500 is again the winner here. Bottom line, the S&P 500 beats IIPR long-term and short-term. And with the stock hammered down quite a lot recently, it could be an interesting buying opportunity. So, is this indeed the perfect time to buy IIPR stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth, I'm filling in 2, 4 and 6%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin, I'm filling in 50, 54 and 58%. And for the free cash flow margin, I'm putting in 80, 82 and 84%. For the PE ratio, I'm putting in 10, 12 and 14. And for the price to free cash flow, I'm putting in the same numbers. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. And right now, IIPR stock is at $109. I hit analyze, and we see a lot of red numbers. And since this is a REIT, I'm only focusing on the discounted cash flow value. We have a low price target of $82. We have a mid price target of $105, and we have a high price target of $133. To me, the mid price target is the most justified here, indicating that this stock is slightly overvalued right now. My final conclusion on IIPR is that the tenant growth really starts to worry me. I've been following this company for quite some time now, and every quarter I hope to see some new tenants coming in, and numbers to go up again. Unfortunately, that's not the case. Revenue is slowing down big time, and margins are decreasing slowly. Lucky for most investors, dividends are still looking pretty good, and debt levels are amazing. So you got that covered. For now, I'm skipping this stock and keep analyzing them from time to time, because I really think it could be an interesting addition to my portfolio with this specific niche focus. And what are your thoughts on IIPR stock? Let me know in the comments down below. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.